So, unless you've been living under a rock, no pun intended, you've probably tracked the price of gold recently. And after all, it's been on an incredible rise. From January 2024 to today, November 2025, it's more than doubled. And that's odd for gold. It goes through these super cycles every now and then. And this last market cycle has had people calling out another super cycle. So I thought I'd go in and look at the data, and something I found was really interesting. The demand for gold isn't really coming from the US, and that's fascinating to me. See, the United States is the largest capital market on the planet. It has the richest consumers, the most investors. It has more money to throw around, at least on a per consumer basis. When you tally up the fact that there's 3 to 4 times as many Chinese people as there are Americans, the numbers start to get a little different. If an asset doubles in a year, it's usually because there's lots of flow from American capital. But that's not happening. Yeah, there's an increase in demand for gold, but no more than we really saw in 2022. And when you zoom out even further, it doesn't look all that unusual. It looks like there's speculators, which happens when the price of gold doubles. But the inflows to ETFs, shown below, and these are monetary gold, right? Remember that there's a difference between gold that's held as an investment, like in an ETF, like GLD, but there is also gold that is like manufacturing gold, used for jewelry or electronics, what have you. This is only monetary gold we're looking at here. And we're seeing inflows, but even from before the rise, we really didn't see that many inflows. The inflows really started in Q1 of this year. Wonder what happened around that time. Even when we're looking at futures, which is the way that most institutions prefer to hold gold as opposed to ETFs, we don't really see that significant of a rise. The open interest really just looks like speculation based on a rising asset. This looks like traders chasing momentum. And if they're chasing momentum, that means that US traders are not the momentum. So what's going on with that? Where's all the gold going? As per usual, got a couple little theories. The first, very obvious answer is central bank purchases. Take a look at this. This is the last decade of central bank gold purchases. The top purchases are World Gold Council estimates. So they're trying to factor in the bad acting nations who try and hide some of their gold purchases back in. And when we're looking at this bottom chart, declarations to the IMF, we see that there's a mix of countries from the first and second worlds. Poland is at number 1, 67 tons of gold imported, followed by Azerbaijan, Kazakhstan, China, and Turkey. Funnily enough, all these countries are right next to the Russian bear and could stand to be sucked into any conflict that they force themselves into. And so, since 2022, foreign nations have been importing tremendous amounts of gold. This is the World Gold Council estimate of just the People's Bank of China. How much gold do they have on hand? Remember that they tend not to tell everyone the truth and have a vested interest in hiding their gold stocks. Fair enough. If I was competing against the dollar and realized that I was never going to win on that front, then I'd probably be hoarding gold too. Take a look at when the gold hoarding starts. And I think that this is really indicative of why this last chart has changed. 2022 changes everything for the world, not just the People's Bank of China. When Russia invaded Ukraine, we froze 300 billion of Russian assets. They were dollar-denominated, held in US-based accounts, or were within our reach in Europe, etc. And we seized them. The Russians no longer have access to them. But the Russians didn't invade a NATO country. They invaded a neutral country. Now, up until 2022, belligerents weren't punished the same way that they are now. This freezing of Russian assets, the weaponization of the dollar, made it clear to everybody that if you don't play not just by the US's rules, but by our values, then we can harm you and we can take all of your dollars. Well, what's your reaction to that? Store the one thing that can be used like money that the Americans can't control and can't devalue. We could attack the renminbi, we could attack the ruble, but it's hard for us to attack gold the same way. In fact, the Russians and Chinese pull a lot of this gold right out of their own ground. Sometimes the man behind the curtain in China is exposed for just a moment. This is an image of gold stocks at the Shanghai Futures Exchange. Tons of gold they have on hand in order to secure futures contracts. And it's jumped tremendously in 2025. We went from under 10 tons at the exchange to over 90 in the course of a year. The Chinese have been hoarding gold for centuries, but specifically in the last couple years, look at this chart. In 2021, we saw a relative peak that was surpassed in 2024, and since then it has taken off. Part of this is the previous chart. Shanghai is factored into this gold and China graph, but it's more than just that. It's also their central bank and it's individuals. We're seeing news stories come out about people in China who can't afford gold coins. Remember that 1 ounce is about $4,200. And so they're buying these little gold beans that are sold. They're not monetary gold. They're basically collectibles. But if you melted them down, they'd be real gold. And so a trend of people who can't afford actual gold bullion not turning to silver or turning to other precious metals that are cheaper, like what often happens in America, we see the opposite. They're just buying smaller gold and they're not worried about it not being stamped or being monetary gold, the same way that most Americans would probably be very concerned. The third piece of the puzzle is cryptocurrencies. So in the world of stablecoins, most stablecoins, and the Genius Act ensures that all of those that are regulated by the United States are going to be backed by treasuries, but Tether, the world's largest stablecoin, they're backed by a mix of treasuries, reverse repurchase agreements, and Bitcoin and gold. Just like foreign central banks are stockpiling gold in order to protect their domestic currency, Tether is buying gold in order to protect its currency, USDT. To keep the USDT always worth $1, you need a bunch of money to back it up so that people could come and exchange their Tether for dollars. If you do this, then you have trust in your crypto. And trust is necessary for stablecoins. People need their $1 in a stablecoin to always equal $1. But one thing we're noticing, and this chart shows, Tether is buying so much gold that they're outpacing foreign purchases. Tether, the company, bought more gold in Q3 of this year than Kazakhstan, Brazil, Turkey, and Iraq. Tether bought more gold in Q3 than most countries combined. And that's a scary thought. If these unregulated dollars like Tether are backed by gold, the central banks are hoarding gold, and Americans are still not investing in gold. They're mostly still just speculating and chasing momentum. So what happens when Americans start to realize that this new paradigm in gold is here to stay? It's mostly being purchased by organizations that are going to hold on to it, that are not going to value it and mark to market their gold stocks day to day, week to week. They're not speculators and traders. Most of their gold demand is not coming from the US, and most of it's not coming from speculators. It's coming from sovereign wealth funds, central banks, cryptocurrency issuers. The largest stablecoin issuer in the world is buying more than most central banks are. This is a new paradigm, and gold is having its time in the sun. Just be wary that there's more volatility than there used to be. And if you're speculating on gold, be concerned about your own solvency. These central banks, because they don't care that much about the price fluctuations, also won't care if the price drops a whole lot. In fact, they may just keep their buying consistent. They're not as worried about their cost basis. They're worried about how much gold they have on hand. And when you shift your thinking to that way, it's a different story. This is how the Chinese think, and this is why they're hoarding gold and not other metals. The big catalyst I think to look out for, and this is a theory of mine, is that in the next 5 years, BRICS, a somewhat informal economic alliance between Brazil, Russia, India, China, South Africa, and their friends, they've been threatening to make a new currency to compete with the dollar for some time. It has to be a new currency because none of their individual currencies have enough utility to replace the dollar in any real capacity. The renminbi in China, yuan, is too heavily manipulated to be trusted by all parties involved. Plus, all of these currencies are fiat currencies. They're based on the faith and credit of the country who issues them. If we're going to establish global trust in a currency that you could use in the Middle East, because here's why BRICS wants a currency. They want to do business with the Middle East in a currency that the Middle East will accept. Currently, the Saudis, Kuwaitis, Emiratis, whoever, they accept US dollars. It's been that way since 1948, basically since they started drilling oil. In order to change their attitudes and get them to sell you oil in a different currency, you have to create trust in a currency. None of the currencies that exist within BRICS currently have that trust or that buying power. I think the only way to ensure that trust is to give oil producers something like a hard currency. They're not going to trade in actual gold bars and whatever. It's just not viable to do that. But they could trade in a currency that's backed by gold. I think actually they'd probably need so much gold to build this currency that they would need more gold than exists in order to get the size of currency that they need in order to do the transaction volume that they want. There's a lot of oil sold, and it takes a lot of money to go through. Because we can print infinite dollars, this isn't a problem. So backing this currency on just gold doesn't make any sense. It's not mathematically possible to achieve their goals this way. But if you introduced silver, platinum, and palladium to the mix, you had a basket of precious metals that this currency was tied to. Well, now you've got something. Who mines all the world's silver, platinum, and palladium? Oh, Russia, China, Brazil, South Africa? In a world where this BRICS currency comes up, you know who also trades it? Kazakhstan and Azerbaijan. Places that have oil and resources that sell to BRICS. Places that are currently stockpiling gold. If you've made it this far in the video, thank you so much. You are part of 30% of people who make it this far, and I know that you will enjoy the content I put out in my newsletter. I send out a roundup of ideas in technology, business, markets, this same kind of stuff I do here. A lot of it is heavy on charts and some like commentary. They're quick reads designed to be read with your Sunday morning coffee. I will leave a link in the description if you'd like to go check that out. It is totally free. All right. Thank you so much for being here. I'll see you next week.